The 10-year Treasury yield hits a 7-year peak.
Emotion has no place in your investments, so how do you know what news actually matters? Hi, I'm Eric, and in the next few minutes, we're going to forget the headlines and focus on the facts. Here's what really happened last week.
Friday, the yield on the 10-year note reached 3.23%. This is the highest level seen since 2011. Its yield rose dramatically last week, influenced by hawkish comments from Federal Reserve Chair Jerome Powell and reports showing minimal unemployment and a swiftly expanding business sector. All this strengthened investor perception that the U.S. economy has hit its stride. It also suggested a near future with recurring interest rate hikes, costlier borrowing, and subdued spending. That possibility weighed on equities. For the week, the NASDAQ Composite fell 3.21% to 77.85, and the S&P 500 down almost 1% to 28.85. The Dow Jones Industrials Average retreated just 0.04% to 26,447. A look at the Department of Labor's latest jobs report reveals good news and some bad news. The good news, unemployment declined further to 3.7%. Annualized wage growth improved to 3.4% in the third quarter, and monthly net new hiring averaged 190,000 in the third quarter of the year. The bad news, however, though, is payrolls expanded with just 134,000 net new jobs last month, as underemployment ticked up 0.1% to 7.5%, and year-over-year wage growth slowed to 2.8%. Some economists feel that Hurricane Florence significantly impacted the September data. The Institute for Supply Management said its non-manufacturing Purchasing Manager Index rose 3.1 points in September to 61.6. It has never been that high in its decade-long history. ISM's PMI for the factory sector took a slight dip in September, slipping from 61.3 to 59.8, but still showing fast expansion. Crude oil is on a 4-week winning streak. At Friday's closing bell, the price stood at $74.34 a barrel on the NYMEX, reflecting a 1.5% rise in 5 days. Again, worries over U.S. sanctions against Iran helped to send prices higher. WTI crude settled at $76.41 a barrel on Wednesday, which approached a 4-year peak for the commodity. All right, looking ahead at this week, the bond market is closed here on Monday in observance of Columbus Day. U.S. stock exchanges are, however, open for business. No major economic or earnings releases are scheduled. Nothing major also is slated for tomorrow, Tuesday, either. Wednesday, investors consider the September Producer Price Index. On Thursday, the September Consumer Price Index appears, along with the latest initial jobless claims report. And then the fall earnings season begins on Friday with a number of companies reporting. In addition, the University of Michigan's preliminary October Consumer Sentiment Index arrives to wrap up the week. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. If you'd prefer to read the transcript each week, you can subscribe to that at www.erichagan.pro. Also, if you'd like to get financially organized, head on over to nocostfinancialdashboard.com and take control of your financial future. Lastly, if you want to find out if you're invested right, visit getinvestedright.com right now. Thank you again for your time today. I'll look for you next week.